Yo, Cons, thanks to uh Yishin. What's up, man? From Korea. What is up? Donkey Kong. Yo. Doing a little afternoon session here. Session in the live. Aldo, what's up, man? Ew. I must have found something. Echo, what is up, man? Weird time going live. It is a little weird going live after hours, but I think, yeah, there are a couple things that I've been looking at and have found, so figured I'd go live and talk about it, man. Flicker, what's up, man? Can't wait to fly over to the moon. Yeah, we'll talk about some things. Cycle things. AMC, GameStop. Couple of things actually to talk about right now with GameStop too. Knowing that GameStop is on an uptrend when the market is really unsure of what it wants to do. So I guess we can pull up all these little things here together. And I'll bring up some of the things that I talked about here on the Discord as well earlier. So they're gonna, these are gonna be relevant to each other. You know, AMC and GameStop basically track each other, even though one will have a higher gain percentage, vice versa, every single day. Really, the macro moves that we get here, they do tend to go up together. And right now, you can see GameStop is currently on this, trying to do this V reversal here. But one thing I had talked about on the Discord today was we are in a potential wedge formation, a short-term wedge formation. And, this would be coming in to what is our POI here, end of November. So end of November, going into December is the start of the macro POI we have on AMC, which is right here. And we're starting to see things stray away and play out inverse here on the red portion of the cycle. So we have seen this happen before. We saw it back here. You can see as soon as we started to climb back up, we did have a breather stage here right before we entered the green portion of the cycle. So this is, we are following a very similar cycle to what we're seeing back here. And normally from the POI we had back here in March, we did have a breather cycle. So this breather cycle, not much happened. It just traded sideways. And that's basically what we had right here. And up to that end, right here on the tail end of this red portion, is when we started to climb back up, right? So going into December POI. This is why I'm pretty bullish here in the short term for AMC and GameStop. Now, that doesn't mean that we can't have a breather before. And I've been saying this, ever since we had this call out here at that 860 range, 850. Now we're getting that push back down with the market as the market is coming down. Now, the market. Okay. I'm going to pull up some things that I just talked about over with the Discord as well, and it's something on the website. But the current setup here we can see is this is just Ivy crushing all contracts. We open up green, we come back down, and now we're trailing back up. It's likely we're going to open green tomorrow and then trail back down for the end of the week, right? I don't see a pullback here on the market until next week, Monday, Tuesday. It's possible we start the trend tomorrow, but even then, it wouldn't be as hefty of a push down as most people are expecting. Not that it can't happen, but right now the entire market, small cap, mid cap stocks have been beat down to the bottom. And how much more can they really go down before this market turns around for good? So yeah, dude, that's why I'm like, this is priming up to really start climbing up here. And I guess I can pull this up now. Let me see. So one thing I talked about, and this is where we kind of go back and we pull up crypto here, because crypto is sometimes what like a big indicator here as to what we can experience with GameStop and AMC moving forward. So one thing that I know right now is, Ethereum Classic has been something we've been tracking. Whenever we get like major pushes to the upside, typically Ethereum Classic is one of the cryptos that goes first before indicating any upside on AMC. So with GameStop, there are two. There's Doge and there's Shiba. Doge and Shiba both normally do have a correlation here with GameStop, in more of the structure of the pattern really than AMC and Ethereum Classic. They're a little different, but I have seen a correlation here with the bigger pushes we get on GameStop. Normally Doge is one to track. You guys can see here clearly we had a nice push up here on Doge and GME together on this push, and there's been a lot. Yes, they do go up together with also AMC, but there's more correlation with Doge and GME than there is with AMC. So AMC is highly correlated with Ethereum Classic. So this is again, we're talking about this so we can bring it up and talk about it with AMC as well. Like, this is correlated to AMC, but we need to talk about GME first for this to help us narrow down the possibilities of what we can experience moving forward. So one of the patterns here, and you can really go all over crypto. Shiba was another one, and I think that's the one that we took here because I think it's relevant. So let's do Shiba here, take away Doge. And I think right now the entire market is currently like right here, okay? This is where we're trailing behind. Obviously, you can see it's about a week, maybe a little bit longer. Is normally the cycle right now that we are tracking is going to be about a week to 10 days. So it's a range. It's 7 to 10 days, and that's not including market days. So it's a little bit less. And that's the separation, at least here, that I can see based on the cycle. If we take this pattern, this entire pattern right here, kind of see what I'm talking about. But we go to GameStop. And, we just got to put these together. Now, look at how accurate this pattern is. It's like Shiba and GameStop are the same thing, right? Now, this is calling for a pretty large extension here, and this is just a reference pattern, so it doesn't mean that we're gonna do this or play this out. But I want to pay attention to at least the first part of it, which is this right here. It's a wedge. It's basically you're making a wedge. Okay, coming back down, and then you narrow it down around December. This is where I think the algorithm would flip and start playing out inverse, because they're just accumulating so much in this section of the cycle right here since September. Really, well, since we had this POI in August, this entire thing here is just one cycle, one giant cycle. And this is just the accumulation part of it. So how much more can they go down here before things actually pop to the upside? Well, this is where we narrow down the points of interest, and we have our little vertical line here is telling us this is a stop, right? This is how much time you have before the POI, and we have till December. December 16th is the peak of the cycle right here, which is a quad witching date, by the way. Quad witching date. So that's important. We know that on the quad witching curve, AMC is expected to move higher, but just it has to climb there first, and we have to sort of see how that's going to happen. So it's going to be very important here that soon we either give me 1 second. Okay, so it's going to be very important here that if we do respect this wedge here, which is possible, okay, the only way this would not be active here is if we get a massive V reversal here. So if GameStop were to have a nice push up here, and I'm going to show you one other correlation that I have found in the markets that is a bullish one here for AMC and can be a bullish one for for GameStop and can be a bullish one for AMC as well. And that would actually mean in the short term things would start to rally very quickly. So there's two scenarios to track here. One would be the wedge and more consolidation before things actually pop back up. And the other one would be that in the short term, like in the next 2 days before the market takes a breather, we start to rally. And then as the market starts coming down for this this POI here, this is the peak, remember. So things can happen in the next 2 weeks, because if this is the peak of the cycle right here, and that means that all this volume here would have to happen basically before that. So right around the 5th really is when we would be expecting a bigger push to the upside here. So whatever happens before that, you know, whether it's upside like this, you make a little projector, hovering projector, you come down, and then you start climbing back up, that would be valid too. So it's like, how is this going to do it? And you know, that's why I'm tracking GameStop here. So highly interested in what we're gonna see here, and really in the crypto markets too. If things start to go back down, that might also be an indication here that, well, we know that crypto goes down, and then the correlation that we have seen before is that Bitcoin will take a breather, come back down, and then about a week or two later, that's when you start to see these meme stocks rally, and like I'm talking bigger rallies. So let's see if I can pull up Bitcoin here. Before the June run up, damn. All right, so here's Bitcoin on top, and here's GME on the bottom. Before the June run-up, we saw crypto take a massive dump, right? We saw a massive dump here, and then this was leverage we used on AMC and GameStop. Obviously, AMC was the winner here in June, but GameStop also had a rally, okay? Now, right here, right now, we're sort of experiencing this, at least what could be the start of it, right? But since we are trading at this lower range now, and the market is deciding whether this is going to be a spring or not, the algorithm here, we can be in a different section of the cycle. So this doesn't mean that, you know, things are going to last this long and then we're going to start coming back up. This can be a short-term version of possibly a spring back down here where things actually start to rally, and then that would sort of mess things up a little bit, because well, things wouldn't be tracking in the same order that we previously saw. So, you know, both setups here look pretty promising. I mean, this looks really good on AMC, but we do need to have a bigger push, or GameStop. We do need to have a bigger push here going into tomorrow if things are going to be valid here in the short term for a POI here in the next week. If things don't climb back up and we start going down with the market, it's very likely we're going to do that setup I talked about here, which you can clearly see it on Bitcoin as well, right? It is spread out a little bit because, remember, Bitcoin is trading 24/7. Here on the charts, you're not going to quite see that the way it looks, but here's the wedge formation you're starting to see on Bitcoin, right? On GME, it's not there yet. It's like a V reversal, right? But it hasn't even quite gotten up to resistance yet, so it still has room to make this wedge, right? So this is very important to track this. Now, one of the things, and this is where I'm going to pull up the website and sort of talk about this here. me a sec. Pull this up. All right, so let's talk about this. Let's pull up the website here. There we go. Awesome. Also, if you guys want to join the Discord, I am running a promo here, 50% off for the holidays. So if you guys want to come in, 50% off, $50. All right. I'm going to pull up a scanner here. Now, this scanner is a bunch of different references and coders involved in this. Is like a giant thing here with, and I'm looking to basically narrow down and expand some things on this scanner here. So it's still in development, and this is not published or anything, so you won't be able to access this or anything. I'm just going to show you what we can do with this, because this is really interesting, and this is something I used just recently to sort of see what the markets are projecting, and I think it's one of the most important things one can really track here and use. So it's a stock scanner, and you can track stocks, and it'll give you a pattern correlation. Depending on the correlation here, you can list these, and basically with the correlation here, it'll give you the highest correlation. Uses a lot of different code and math to be able to spot and scan the entire market and narrow down what patterns you can basically project in the future. So one of the ones we looked at here, let's pull up the NASDAQ. Okay. It'll give you a forecast, and I believe the window was 16 days that we used. No, it was 20. I'm sorry. 20. And we're going to do 2. It was TYL. Yeah. So what we did was we looked at this pattern here, and then what you do is you go back. So here's the pattern correlation thing. You go to the start date of that stock here. So it's giving us a nice correlation with another stock. So TYL start date 2021 on July 1st through July 29th. So what you do now is, now that you have that information, we take this away. We go to TYL here. And I already did this, so I'm going to grab this pattern for you, and so you guys can sort of see this, right? So we go to July 1st, right here, all the way to July 29th, right? So this pattern right here, we're going to grab that, and now we're going to grab the extension of that pattern, because this is forecasting something. So we're going to take this, copy, go to NASDAQ, okay, and then we're at NASDAQ, copy that pattern, paste it, and now it's a 20-day window, so you go back 20 days, right? And that's where you start and you track this pattern. So we're here November 17th, you just count backwards, 1, right here, okay? So we start right here on the 20th, that's 20 days, and it has to be stock market days, you can't count weekends, okay? So you grab this pattern, you put it back, boom. So we have a match right there. And this is why I love this pattern recognition tool, because then it gives you, now that we have this pattern here in this reference, pull it back up, grab the other pattern, the extension of that pattern, because guys, remember, when you have a pattern you can track as reference, you have the correct ratio levels, and you basically have how algorithms work. They're going to be doing these patterns based on fibs, based on according to time, which is very important. And the previous setup, the setup afterwards, if you have a tool that is scanning this for you, that's a game changer right there. You can use it as reference to see what the market might do in the future. And it's just a better way to really analyze the markets. You have a really nice tool to show you that. So here we can see that this is what it's projecting after that, right? You have a nice little projection here. And this goes also with the copycat indicator. So we were a couple of ways to confirm this, and why I love this is some of the indicators that I have here. So I have two that I made, spots and then copycat. Okay, both of these. The copycat, you can see it's actually very accurate to what this pattern is projecting. This is what copycat is projecting on the 3-hour. And we pull these together, and now you have all these tools at the same time projecting a very similar outcome. And this is how you narrow down the POIs. You narrow them down by not only looking at the pattern analysis part of it, but you're taking the cycle indicators. You're taking now the scanner tool, which is new, right? It's not on the website yet. It's coming. And then you've now narrowed it down to this specific point. You can use this with AMC, use it with GameStop, you can use it with basically the majority of stocks, and hopefully crypto at some point. Going to do the integration for that. So this is just crazy. It's awesome. And I've already said this, man, with the SPY right now. Okay. Pull up the SPY. What are we projecting? We're projecting a very similar outcome, even though NASDAQ and SPY are right now not necessarily tracking the same way. I mean, they do look different. So we go back here on SPY. Okay, we are projecting a potential push up before it does come down next week. And you can see that here with this pattern, calling for downside around Tuesday next week, okay? And that to me is ideal. That would be an ideal setup for the next possible move here in the market, okay? Again, using a pattern recognition tool to help with the indicators in the end and then narrow down the points of interest that we have here in the market. So I use this with AMC, with GameStop. It's a really, really nice tool. So based on this and what the market is projecting as well, if we do come down and take this breather before we do have and we come close to this POI here in December, it would mean that right around early December, we would probably start climbing back up. So we would do a breather, and then the market starts coming back up here in December, and then we rally, right? We rally with the markets. That would be ideal. That would be the bullish case scenario. I think that's what I'm sort of projecting and calling for here, since we are trading right now at resistance. Okay, this is the macro level of resistance, and this is your secondary level here of resistance, which we are just riding in. We haven't, one of the bullish things that I did say is that we did not come down. Look at all these patterns right here on this secondary resistance. Look at how quickly they come down. All of these. Right? That's quick. These are all quick, dude. Okay? This one is just hovering. It's just hovering right over it. All these are quick. I mean, the fact that we are just riding this wave and we don't want to cross down just yet, okay, this to me is pretty bullish, is that we're just consolidating right on top of this range. You can't even really compare it to right back here, because right back here, we created the macro resistance trend line here. This was where it was created, right? It's just riding the way back down. But once you touch that secondary resistance, which is like invisible here, but it's clear, you can see that all of these had major pushes back down except this one. So this might be an indication here that in the short term, if we do cross right above it and then start trading on this range, this might just start to pop and go back up. Like I said, I've already called for the 420 level by the end of the year. I'm pretty sure we're going to get up there unless we just completely dump and go below these ranges of 360 again. Then at that point, obviously, it would be very unlikely that we would reverse like that in the SPY. But the fact that we're trading up here right now and we haven't had a major pushback down is pretty bullish to me. Okay, so back to AMC. I guess I can see if I can show you guys a couple of things. The 4-hour copy pat is actually pretty ideal to me. I think this layout right here, where it's just Ivy crushing up here, all these contracts, drier volatility. As you come back down to touch the 650 range, which I think we would get down there first. Once we do that and establish that level of support, then it would be ideal to start climbing up and heading for the next push up. You know, this right here, this rally was a 66% rally. So it's possible that the next rally on this POI in December, if it's a macro POI, all of these were 100% and higher. If this was a 100% move from up here, it would be around the $16 level. Okay, and that would be the start of this triple bottom setup. Okay, right here in the market on AMC, we still have this. It's still relevant. Right here. And you can see that, you know, the projector here doesn't have to look the same. I mean, back here, we had a point of interest. We clearly got a bigger push up. This one is the one that looks more accurate, right? Because we come back up. We're still just riding what could be this giant cup. But right here on this range is where we might just have a smaller projector. We might not completely get to the peak here, which is 27. That would be a crazy push up. I mean, this would be from the bottom here would be like a 500% push. Yeah, dude. So I mean, that's strong. That's big. I think that is, you know, you slowly start to climb up there, and then you possibly do a move like that when we get closer to the next point of interest in February. So that's like, I think that's the best sort of case scenario here. If all plays out, the market is still bullish, I think we would see something like that. But for now here in the short term, I think this right here, a 100% push from that level would be around 16 first if we were trading right around this range. Okay. And then as soon as we're done here in the December POI, we would consolidate for a little bit with the market before going up again. So that still hasn't changed. Again, we're trailing up. We're still on this. I think we're still on good terms here with the charts. We haven't even touched support yet. So Ivy Crush, man. Ivy Crush is real. Talk about Ape? Yeah. Okay, so Ape is also, and I'm going to talk about AMC plus Ape. I think that's more relevant here. It's another indicator that I have. AMC plus Ape, showing us the actual price of AMC, the true price. You can see right here on AMC plus Ape, where we're currently trading at, the bottom here we came extremely close to what was the previous bottom in January. Prior to the January pump and dump here, we came extremely close to those levels, and then we just sprung, right? We just started to rally back up. Now, something that's pretty interesting here about the setup is what, like, you can kind of treat this chart in that way, where once you did spring here, because the timing is, and this is going to get a bars pattern from AMC's chart, not AMC plus Ape, but it's going to be the same because we didn't have Ape back here. So we're just going to, there we go. You can see here how this is sort of lining up in the same way. If we did have a slow and steady run, look, actually this is really relevant here, because you can see that the POI that we have here as we reach the peak at least, would show us that this would just be a steady push back up. Now, I'm not going to track the levels here or anything, but I do see something similar happening. Especially if it was a move like this or something. Because now what you're doing is you're creating a parallel channel right here. Okay? It's a parallel channel. Doing something like that. You're just bouncing up and down on these walls before, you know, you start actually curling out and leaving that zone, which is just essentially what we want to see is a projector. We want to see this, guys. This right here is what we want to see. Okay? You know what? Now that I kind of see this, dude, this looks very similar to 1, 2. Well, I mean, yeah, I mean, the same fractal we've been looking at here, but if I want to show you how these lows, like what's relevant about these highs and these lows on this projector, it's not gonna be accurate because this was a very different, you can almost flip this maybe. Wait, that's actually pretty insane. What the hell? Whoa, what the heck? That was an accident too. All right, but you can see here how the POIs line up, dude. Wow, yeah. This is an inverse. This is completely flipped, by the way. But what you can sort of track here from this, and I think this is where it's good to really zoom out of the chart and go, you know, possibly even go to the daily chart to get that smoothed pattern here. Some of these don't necessarily matter in the same way. And flip this. Did I get this right, dude, or am I tripping? I mean, essentially this would be calling for like a pretty big push in the, well, no, still set up to be in the February run, not, because it's a slow and steady climb up first before setting up to run in February. So this next POI is, I wouldn't be expecting the squeeze. I would be expecting a projector pattern to come up and touch resistance before consolidating again. And that's going to be important to note here because I'm not calling for a major push. I mean, it's going to be a big push if things are tracking and slowly climbing up to that range, but I don't see this completely just going parabolic here on this next run. This next run just specifically for this projector. And this is just one level of resistance coming up to this range here. The next one, the next level of resistance we've already crossed. This is just one because we already crossed the macro level of resistance. You know, that's the one that we're currently just getting that effect from, which is this, the catapult effect, right? That we said we're going to ride this wave down until we can't anymore, right? You can't cross below this. So we're clearly on a new trend. But now this new trend is, this is the level of resistance that we have, and it's going to be around, this is about 20. It's going to be about 20 for AMC plus APE. It's AMC plus APE, so it is different than just, you know, looking at AMC's chart. And this is where we wouldn't quite, you know, we wouldn't know what stock is going to run higher than the other, or if one is not going to run at all. Like, what I can say right now is that AMC has been leading. This previous run, we've seen AMC obviously rally more than Ape. Ape has been on a downtrend here and not really gaining the same way. So that's already telling us something. And I think it's also, it's good for AMC at least that, we're starting to get a little bit more momentum and volume coming in here on this. Because prior to the short here, I had said, Ape did have a nice rally, up 80%, came back down lower, and now we're starting to see AMC basically do the same thing. But yeah, nobody can tell you, man, what stock is going to run higher. That's just something we're just going to have to figure out here when this does happen. Okay. Let's also talk about, I need water, dude. I'm dying right here. Trying to see what else I can pull up, because I did go over this. I want to go over it just one more time. I didn't go over it on this stream. I went over it last stream, but it's the quad witching curve, man. Here it is. So the quad witching curve, I don't want to give too much, like it's relevant. It's very relevant because of the quad witching dates where we have had this curve. Now, the only thing that can switch here, because basically we're just taking an S curve, and the S curve is riding down on all where the stock closed at quad witching. So we have a box here, and we take the high, and we just ride this wave, and you can clearly see that this trend is calling for upside. Well, because these are lined up to the quad witching dates. So this, I can't if I shift it down, okay, we're gonna get something completely different, and that just wouldn't work, right? If I bring it down here, it wouldn't really quite work. Now, it is a range, right? This is a very it's a pretty big run here. It'd be $20 on AMC, not AMC plus Ape, because this is a quad witching curve on AMC only. So you can shift it a little bit, but even then, like, we were taking the mid-range here, a potential mid-range from the high. It would be kind of hard to do that with this, but we can clearly see that there is potential for this to at least run and maybe hit that 18. It's a range, guys. It's a range. 18, 20, 16, I think would all be pretty valid for this as long as we closed above it. It's really important that on this next quad witching date, AMC closes above this previous level, which is, here would be around, let's see. Well, the low was 9. That's where it closed. So as long as we close above 9, I think that would still be bullish. It would be slow, right? It would be a slow trend up, closing maybe at 12 or 11. That would still be a slow trend to the upside, but it would be bullish because we're closing higher than the previous quad witching date. So it's still valid, and it still validates this trajectory change. If we close below it, then we start to come back here, okay, and we look at something else. Because here you can see that when this quad witching curve started all the way back here in March, here it was trailing up first, but then we closed below it right here. See how we trail back up and then we come back down? We still have some bullish pressure, but we actually closed below it, and then the next one we closed even lower before climbing back up. So there's many ways you can look at this, but right now what it's seeming like is happening, well, we're trailing to go back up there. It's just how fast is this going to happen? And we really only have a month for this to reach that level. If you think about it, if it doesn't go up there in a month, then this would not be valid here for AMC to play out this bullish trend here on the quad witching curve. So yeah, this is still tracking. It's still looking pretty good. It's going to be important, guys. Look, I'm just going to say this. I think most people are looking for some kind of, at least some kind of bullish, like best case that we have to actually support here would be that if we climb to the 650 range, we must bounce back and come back to resistance again for things to still be trailing to the upside and still be bullish on AMC. Any cross below this, I'm gonna say like lowest possible would be around 620, and that's like pretty low. If we come below that range, it's very likely we're gonna double bottom, and if we double bottom, that would be bearish. That would be a inverse POI we would be expecting for December, and then at that point, this giant setup that we have here on AMC was, it's almost starting to pull back up here and be bullish, but then is being rejected again. And I'll show you an example of this just because I want to talk about like the bearish possibilities here. This is Nikola. Okay. This is a prime example here of what could potentially happen if things are bearish. Nikola was one of the ones that sort of started this whole thing way back here in 2020. So this was before AMC, before GameStop. You can pull up AMC here, and you can kind of see their similarities. Nikola, I mean, they almost look like the same chart if you take them back from 2020. Now, you can see how these are relevant to each other because they have cyclical volatility zones reoccurring. And on Nikola, it started the same way, okay, AMC, and the trend bled till this thing reached the current levels, which is currently trading at $2.87. So it just went straight down. It was just this thing narrowed down to basically nothing. Obviously, these are two different stocks, and there are two different communities involved in these. AMC is not at all treated the same way, so there's different, right? The only thing I will say is, there's no reason to just ignore the bearish side ever. So it's still important to treat it as if the worst case scenario could be at play. And the worst case scenario here is if we have an inverse POI, I would see a tube setup like this, and it would suck. I mean, this is just, I don't like it. I don't think anybody likes it. It's just a narrowing, falling wedge, basically. You're just getting tighter and tighter. I mean, the good thing about something like this is that you're clearly still experiencing the POIs. They're still active, and Nikola follows the meme stocks. It has the same POIs. This stock is... It's still considered on the lower end of things, it's still considered a meme stock, but you can see it follows the POIs like the AMC is doing. January, right? June. This one we're at right here, it did pump and then dump with AMC. We have the March, August, and then right here you can start to see that it's climbing back up again. There's a lot of potential for Nikola, by the way. This is one of the stocks I've been pushing on the Discord, because it's probably going to blow up at some point. It being shorted the way it is. So that is the worst case, guys. The worst case is that, we just follow this like very narrow inverse wedge for a while. But that would only be at play if we cross below this current level at 5. Because once you go below 5, and AMC is just not trailing back to the upside, it's likely that things are going to go lower. I mean, it's a psychological level. We had this same problem here with 10. As soon as we crossed 10, it was a lot easier to go down to 5. And then, if we go below 5, well, just sort of look at it that way, is that there has to be a point where the psychological level is just completely canceled out and reversed, which is exactly what we're seeing right now. This they didn't like the $5 level. Boom, you go all the way up to $8.60. It's a big, big move. So worst case, man, that's the worst case. But looking like things are pretty bullish right now. We're gonna stick with the bullish case here scenario. All right. Alrighty, guys. So that is what I got for you today, man. Just wanted to go over the charts like we always do. Update the charts. I'll say just one last time here. If you guys do want to, again, the cycle pattern tracker here won't be available for a little bit, but it will be on the website. And if you do want more information and stuff, I am running a promo here, November promo for the gold membership. If you guys want to do that, 50% off. Just click the link below and join up with the squad. All right. Is it what I got for you guys today? See you tomorrow.